Hello, this is the CEO of Weisenbach Investments, and I am a value investor, a market profile trader, and an Elliott Wave trader. Okay, so right now, the market is extremely high, as you can see on the chart above, correct? This is a daily chart, and the market has gone up a ton since its low here at October 3rd. Okay, so here's our volume chart, and this is the Elliott Wave here. So, like I said, I trade the Elliott Wave, and here's the end of wave 5, wave A, B, C, and 1, 2, 3, 4, 5, and A, B, C. So right now we're probably gonna finish up wave B, and we're gonna go into wave C, which is when we go down a lot. Now I expect to go down maybe 12,000 or so. That's where I think the market is probably going to go down to, but we have to be careful about predictions. So I put my shorts in here, but I still think there's good shorting opportunities right here. So I'm putting in more shorts, short selling, and all I do to do this is I just short SPY, which moves in the same way the S&P 500 does. And I can track the Elliott Wave on here, but I'm not going to do that. Okay, so let's go back to, let's go to Dow futures. So right now on Dow, I am looking at market profile. So here's market profile right at the top of value area, as you can see. And okay, right at the top of value area, and it goes up just a little bit more around this area. This is where I'll short sell, or even the very top of value area. So right here, it's right in its point of control on the short term, right here. And I like this movement here because they're tight up bars, which means there's very tight movements, small movements, and like predicted, there's a small movement here, and then I think it should go down. So that's a sign that wave B of the Elliott Wave is starting to close up. So here is a good place to short, very top of value area. Now here's where all the low buying pressure is. I was shorting around here. This is a good place to short. You have to be very careful where you're short, because if you short here, you would have lost a good amount of money. So this is telling me there's relatively low volume, but I'm preferring it a little higher, like right here. And I expect that to happen on Monday for it to go up just a little bit, right there. And then I have some short-term buy orders that I keep in. I'm a big fan of absolute return strategies, so I do a lot of absolute returns, mid-term trading, and long-term trading, and then some swing trading. Okay, so the way I would take advantage of the Dow Jones going down here is that I buy into dog, which, as you can see, it's driven down completely low. Now I've held it for a day and I got about 1% gain, but it does the exact opposite of what the Dow does. So I would be buying it right here, and it may be a little tough. It may go down to 35.51, but that's only a 4.4 point loss, so it's not a big deal. You have very limited risk here. That's the most I think it would go down. And right now, it's right at the point of control, so people are buying it. People think it's valuable, so it's a good place to start. Could go up to 36.91. That's about a point gain, which is pretty good on $36 stock here. So this is what I would trade this ETF for the markets to go down. It's low risk, and everybody likes low risk trades that can make money. Look here, when 2011 happened, you got a almost 7-point gain, and that's amazing. It's huge in a short time period. So the best way to find good buys and shorts, I think, at least for me, and one of the easiest way is just to look at market profile, look where it is shorter term. Like here, it hit so high, no buy there, so just slowly pop down. Right here, there's slowly buying pressure is rising, slowly. And then that means it's a good sign to buy it. If there's no buying pressure at all, I would hope for it to go up a little bit, and then I would buy into it. Or just buy into like here and wait for a rising trend. Buy into the rising trend and then hold it. That looks pretty good. A trade I think will be a good short soon. I actually own this. Here is Altria Group. And look how high it is on the market profile. There is no buying pressure. You can see it was only up 11 cents a share there. So, short term and long term is very low, and I am shorting this right here. Here, I lost just a little bit because of intraday market move, but I'm planning to hold this a couple of weeks, maybe a month and a half. So this is a trade I recommend. Hope you guys get into it. Now, let's address the economic issues here. Now, I'm sure if you follow the markets that you have heard of global growth fears, QE3, and all those worries, correct? So, people are going to make a big fuss about global growth fears so far. At least they have been. But it really isn't a problem because China and Asia has had such fast growth. It's got to slow down somewhere. So it's slowing down. It's been like this for 10 years. And then you know what? They raised their numbers a little bit. So the numbers were better than some people thought. And they've actually had more growth than expected. Even though it's down from now 11%, 8.5% is still very, very good GDP growth. Like, I mean, look at the U.S. It's out of proportion. China's growth compared to the U.S. And then Europe, that is a sound problem, actually. They do have a problem. If they don't get their problems fixed, it's not going to be good for the global economy. So they better get their problems fixed. If they don't get their problems fixed, it'll cause a lot of issues in the global economy. Okay. U.S. growth. What's funny is, when Europe was having problems, we were worried about U.S. growth. When the U.S. and most of the global economy is doing wonderful, well, we're worried about the global growth. So it really doesn't make sense. The market is very irrational. So I'm not worried about growth issues unless there's some kind of oil shortage or energy problem or something of that sort, a horrible economic event, something like Europe or around the entire world. If Asia has too many issues, I would be worried. But actually, if Asian stocks could go down, that would be great because the value investors and absolute return people like me can just buy into it because it's so darn low. It would be great to buy into it. So I would actually, that would be pretty good if I could buy into it. So, if you want to diversify yourself, I'm not a big fan of diversity because all assets are often correlated or move in opposite directions sometimes, and then you'll lose money if you're diversified. So I'm not a big fan of diversification, but if you want to be invested into a bunch of Asian companies, take advantage of the dip, short sell Asian companies in an ETF, and then, buy them back when they're low. You can even find your own ideas or companies that will be good, that you think they're Asian companies and you think they're good, that would be great. I have my own ideas, but I'm not giving all of them away. I already gave you two. So I'm going to close up. Thank you for listening. I hope you found this information helpful. Thank you.